Another one, Athena Healthcare. This is a name that has some capitulation underneath. There's a hammer right here that we can focus on. You know, this is the trade against. This is a shorter term trade, but it's certainly viable. Let me show you why. This was a stock, again, not as, now don't forget, everything I'm doing this week is reversal type of stuff. And that's, look, the market's had a huge breakout. We're in the upper end of the valuation for certain stocks, sectors. We're in oscillator territory. Let me pull the oscillator very quickly too. The oscillator itself this week is showing not full overblown, overbought, but getting near there. I want to see the put calls really dip before I say, okay, I'll pull off even the healthcare. This has been a massive move. We all know that. But let's just look. The oscillator still above 0.7 here. When you get down to these 0.6 readings, that's real danger zone. The VIX has dipped into the 11 range, but again, you know, we're not fully in there where I'm saying I'm not even looking long. What I'm doing is starting to set up short on the things that have been working, but we have fundamental overvaluation, some technical signals, trying to catch some dumb money coming in there. It's hard to say if they're going to tail or if they're going to reverse, but that's what I like to do at this stage of the game when we have something like this. We're not in a squeeze condition where we can try to squeeze, short squeeze or anything like that. Most of the short squeezes are blown out. You see that with AGCO, etc. So maybe we try to make something here as the short fuel kind of goes away. And in the meantime, I'm looking at the stuff that's been left behind. I can tell you on XLV, on the chart itself, on XLV, it's got the same deal going where this has been a big gap up and it's pulled back into here. Look at this hammer right off the Bollinger Band, and it held with an outside day. Volume was great on this move. Nobody cares on this pullback, and people I still don't think they're very bullish here, which I like. So I'm watching Good Day Friday. This is what I'm doing. You know, there's a real Good Day Friday in terms of trading this on the outside day. And I think that that's going to be something that we want to be aware of. And with that type of good trading day, we want to make sure that, you know, how can we piggyback it? And so that starts with, obviously, some of the, anything I see healthcare-wise showing up in the reversals. Athena, I'll show you, it's got a 20% short, right? And so that, you know, the weekly chart, let's go to that. This is ATHN again on now the weeklies. So we'll start there. Athena has been coming into this range at 99, 97, 97. Should it rally? You know, it's a little bit undervalued. It's not fantastically undervalued, and this is a troubled, the healthcare stuff. Actually, sorry, this one is about 40. So this has come down to 3.6 times sales from a high of almost. But again, let's eliminate that 12. Let's look here. I would say this is about 25% under. You know, good margins, but in terms of gross, very low operating margins because these are just healthcare names, razor thin margins. But what I like is, you know, the short interest is still high. It's come off a lot, but it's still pretty high. There's not, you know, it's just worth it. Got a 4% insider holding. And if you like the healthcare stuff, if you see what I'm seeing, then some of these can snap on you, especially if this turns into a range. This can be a mean reversion trade. It's not my favorite. Okay, so here's the after on that trade. You can see Athena jumped quite a bit. There was some non-earnings related news right here. That came a few days after, but this is the hammer that I was talking about at 90 bucks. And there were a few things that tipped this off. The hammer came in. There obviously was support. It just held. And then you're back in that range. And that's what I was looking for, was more of a mean reversion. There were a lot of reasons on this trade. As I showed it in real time, I didn't walk through all the actual indicators, but there was some stuff here, volume declines as well. This came in after the gap up, but there was a nice divergence here as well. Then we got the hammer, and I kind of just knew what to look for in terms of something that was oversold. There were some capitulation indicators too that we use that help. And then I'll show you on the long term in terms of mean reversion. Here's the daily. Now that's that hammer again. We can just look at it here. Now not all hammers really turn into that type of move. There was some stuff in here that really helped. But I'll show you the weekly chart as well in terms of mean reversion. So there you go, right? It dipped down into the 90s, and now we're back into this middle range. And that's the idea of a mean reversion trade, more so than anything like a breakout or a full reversal that can actually go to new highs. That's not really the idea with this trade. It was more about just, it had been really beaten up. There was some stuff in there to say this could go, and there's also, I believe it was on the Rocket stock list. I think that's where it came off of. I'd have to double check. But Fusion Point members obviously get rocket stocks, and this is always a nice move. That's how you end up with something like 90. So what are you talking about? 20, almost the $34 in less than 6 weeks. So you can imagine kind of what the stock and the options did on something like that. All right, we'll talk to you soon. Take care.